You're listening to the Grow Real Estate Investing Podcast, an intelligent real estate investing how-to community where we break down the sometimes complicated real estate investing techniques into straightforward, simple to understand, and easy to follow components. No schemes, just the well-exercised foundational basics of real estate investing. Join us as together we dive into the world of real estate investing success and further release the real estate investor inside.
Hi everybody, I want to take a minute and I want to speak about an article that I wrote that seems to be getting a lot of traction. So the reason why I think this article is getting a lot of traction is the subject isn't something we typically connect to real estate investing. The article is on an economic term called velocity of money. So the article is getting a lot of attention. I think it's because most of us involved in real estate investing world, I think we feel that the market is changing. And I think that makes a lot of us super hyper aware of different strategies. We're all trying to figure out the best way to make a massive amount of money during this shift. But I think there's another reason. I think also the concept of velocity money is pretty provocative. You know, it's about getting big returns quickly. And, you know, as I look through the comments, you know, the article seemed to generate, I'm not really sensing it's a get rich quick kind of crowd, but rather it seems to be kind of seasoned investors. And I think the reason why it kind of gets our attention and the reason why we're all kind of talking about it is because it's the concept's kind of sexy. I mean, you're getting massive returns very quickly. Who wouldn't love that? And, you know, so velocity money, it's an economic term. Short answer is it's how quickly money changes hands within an economy. The faster a dollar gets spent, then respent again, the more opportunities that dollar can be taxed. The more opportunities somebody might be able to do something incredible with it. They might be able to use their dollar to come up with a cure for cancer. They might be able to use their dollar to be the next Bill Gates. They might be able to use their dollar to create several taxable jobs in the economy. Where we don't often hear the term velocity money is in respect to investing. You know, because wise investors know that big wins often come from the long game. This is true in the stock market, and it's also true in real estate investing. And smarts on this really can't be argued. But velocity money is constantly being utilized by real estate investors, and it's an incredibly powerful wealth builder. And so it's worth talking about. So how are real estate investors using velocity money? Very simply, and you're not going to be surprised by the answers. Imagine investing $30,000 and getting for a 12% return, and that return gets you $3,600. And you get that same $30,000 back to reinvest it in only 3 months. That means that within 1 year, you can invest that same $30,000 4 times. At that rate of return of 12%, that's going to be $14,400 return that you made off of that same $30,000 back. So at the end of the year, you'll have your $30,000 back, plus almost half of it more back, 50% more. So as far as returns go, that's a pretty good one. So there's two main ways that real estate investors are getting high velocity returns. One is through house flipping, and the other one is through private lending. So house flipping, as you know, is where you purchase a property, you improve it in ways that will greatly increase its value, far above what you bought it for, and then you're going to sell it for an expected profit. The goal here is to buy the property, renovate it, sell it as quickly as you can, and that is the velocity of the money. And I know property flippers know that they're getting a huge lump sum. I don't know if they always realize the dynamic that's at play there. That not only are they getting this massive payout, but now they can go reinvest it very quickly. And you don't really see that in the stock market. You don't see it in other ways in real estate investing. So house flipping is an extremely profitable way to make money. And it also has that powerful dynamic of velocity of money that's working for you. But it does take considerable effort. You need to find a property, you need to get it renovated, you need to get it sold. So next would be private lending. It's a much more passive way to invest. It doesn't have the time-consuming aspects of property flipping. All you really have to do to private lend is take the time to vet the person you're loaning the money to. But same thing, typically you would loan somebody the money so that they can buy a property, or you might loan somebody the money so they can renovate a property. Sometimes you might do both. I think the most atypical would be somebody owns a property already. They purchase, let's say, a shell, and they need your money to renovate it. You're basically secured with the asset, the shell that they purchased, and they're going to renovate the property and try to get it sold or get it refinanced within a very short amount of time. So same thing, you're going to be getting your money back within 3 months plus your return on your investment. So velocity money also has another dynamic, and that is changing hands so quickly or getting your money back so quickly that you can be very, very diversified. You can change your investment strategy on the turn of a dime. When you're getting your money back in 3 months, when you're making mini investments of just 3-month periods at a time, when the market changes, you're ready to change as well. And you don't necessarily even have to change if you're doing private investing, your market strategy. You can continue lending because the individuals you're loaning the money to, they're changing with the market conditions. So velocity money is very interesting. I'll try to put a link to the article if you're somehow coming at this from the video in the notes here. And happy investing.